What's going on? Welcome on into today's trade recap. Kind of a lot here for not much, but let's dive into it. So really kind of fighting the chop this morning, and we had a lot of little trades that just kind of were small losses. So we starting the day off here, you're looking, we had Meta, AMD. Technically it was one. I didn't size with the appropriate sizing, so I added a second trade, even though it really was one trade. I should have added the full size in the first trade, but I just didn't get enough. And then I was like, oh, risk reward wise, take profit, stop loss wise, I want to have more in case it does work. Because then if it does work, then it will be a smaller win than it should be. And I just want to make sure that our risk reward, we're kind of risking around the same amount each trade to make around the same amount each trade so that the sizing is accurate. And then we had NVDA, which crushed it. And then it did well. So in the grand scheme, you know, we have a 70 loss, a 50, let's call it a 70 something. This AMD, let's call it a 70 something because it was really one trade. So add the 50 and 24. And then a small paper cut on Tesla, lost 46. So a couple attempts. And then we come back and, you know, when a trade really works, like NVIDIA, boom, 180. You know what I mean? So it's kind of just the same. This is a good example, I think, of why we have risk management. And then we played Tesla, made back and some. Actually, this was funny. I'll pull this chart up here really quick. So check it out. This, I thought it hit my target. Because on the chart that I was looking at on MetaTrader 5, which is what I'm using for the prop firm, my target was like right in here. So I saw the lower wick go through my target or my buy order because I was short. But the thing is, I'll have a video soon coming out, really talking about my experience with it. But because of the spreads, it doesn't fill until the bid comes down to that spot. So, or should I say the ask? I mean the ask. It didn't fill that buy order until the ask comes down to the price of my buy order. And so technically the bid went below, but that spread between bid and ask was like 10, 15 cents on Tesla. And maybe it's going to end up working here, but I just locked it in because when I saw this volume pop back in, I was like, okay, this could be a reversal point. The market's actually trending up. I don't want to be short here. Technically my target should have hit, but it didn't. So I ended up, it was actually, it should have been $100. My target was set at $100 roughly, give or take a few bucks. But it ended up, I saw that, I recognized that a little bit late, and then I was like, oh shoot. And then I saw the volume come in, and I was like, I'm just going to take this right now at 54. So that was the thing there. Probably could have been more like a $100 green day or $90 green day, but I'll take green, to be honest, all in. Now, I still have some open positions, which haven't changed. I'll touch on those, but that was kind of Tesla. So I'll just start with that. You know, you can kind of see the clean breakdown that I'm looking at, right? Big move down, consolidation, breakdown for lows, and we got the push. My stop loss was above breaking candle high. So when I entered this trade somewhere in here, I have my stop loss above breaking candle high. And then if you do the math, like what is that risk reward, right? So if you do the math on a 2-to-1, roughly risk reward, that puts you at approximately, you know, where we were. And now we're going to get it here. Either way, it doesn't matter. So it's roughly a 2-to-1 risk reward trade that I had there. Okay. Now, so that was Tesla. The thing is, I did attempt it earlier, and that attempt earlier actually happened to come on this. Looking back, you know, wasn't a ton of consolidation. It looked better maybe in the moment to me, but we had just let time go on. So we get the move down. Tesla puts in a low right here, pops back up to here. Then it breaks that low. I entered here, got a little push in our direction. Then it came back and just chopped around. I put, again, stop loss above breaking candle high, which was right here. So that eventually stopped me out on these wicks. Now looking back, this just really didn't set up. I didn't give it enough time to set up. And so that was the mistake. Now, the reason why I was looking at Tesla just overall is you look at Tesla's daily chart here, and it's the most bearish out of everything that I'm seeing across the stocks that I trade, across the large caps that I trade. So the most bearish, it's down the most. Does it mean it has to go down more? No, but I want to play with that weakness for momentum to the downside. That's what I do. That's my strategy. So that was Tesla. So that kind of covers those two. We lost 46 there, pretty tight stop loss on that one. And then this next one we should have made 100, but made 54. I'll take it. It is what it is. And let's dive into the other losses next. So Meta and AMD. I'll talk about what I was seeing on Meta and AMD. So Meta first, and big picture on Meta's daily chart, like this thing looks good. So I'm seeing, okay, we're breaking out over these two highs right here. Overall, though, on Meta, like I'm considering Meta for a swing trade. And we'll see what happens in the next couple of days. The problem is that next week is CPI, so you have that kind of concern. But, with that said, Meta, honestly, on the weekly chart, right? The weekly chart, very, very nice move up. And now you've been consolidating for months, a couple of months. And this consolidation's pretty clean. I mean, it's not the cleanest, but it's pretty straightforward and easy to see. And then I would suspect that if we can break this out, like we can get a nice move to the upside here. Now, of course, with CPI, PPI, I'll consider that. We'll have to see. Could be a smaller size swing trade. But it was something that I'm considering. I got an alert set and all that stuff. So, and with that said, I think that it's very possible we can get it pushed up to, dare we say, all-time highs on the weekly time frame. I mean, I don't see why not. Chart looks good. Chart looks quite good, and it's holding up. So we'll see. But that was kind of the view. So Meta is very strong. I would be like, okay, let's play the long side here if we get the opportunity. I bring it down to the 1 hour chart to show you kind of what I'm looking at. I've been trading a lot more based off of these setups and not just 5 minutes. So when I see the 1 hour chart break up over these highs, I go, oh, cool. Let's take a look at the 5 minute chart. I then see the 5 minute chart, and I see Meta had this kind of consolidation at the open. High of day was right here. So I entered Meta right here. It gets a nice push, and then it comes right back down. Now, of course, it's gone higher, so it's kind of just messing with you before it goes higher. And that's kind of why I've been liking the bigger time frames, so you don't have to worry about a lot of this chop on the 5 minute time frame. As we're seeing, I think the past couple of days is a perfect example. Because if you just look at the big picture, like the thing is it looks fine. It's actually looking very good on the big pictures, but you zoom in and you kind of got this little bit of a chop before the big move. So whatever. So I get kind of caught up in this, comes back down, hits my stop. I did take small partial profits on that. So it would have been like $100 loss, but I took some small partial profits on the initial pop, and then ended up coming back, hitting my stop loss there. So that was that. And then AMD we had a long as well. So if I jump over to AMD next, you're going to see kind of a similar looking, well, not really, I guess you can say it's similar. So AMD, I'm seeing like up, wick up here, pulled back, wick up, like building these higher lows essentially. But I drew this blue line right here at this high. Now, if I bring this thing back to the 1 hour chart on AMD, you say, okay, where that blue line is, it also kind of matches up with some of the highs of the past couple of days. So you're kind of almost seeing a breakout to the upside of this, if you want to call it a consolidation, or this phase of just chilling right after the big move up. And so that's why I liked it. And it essentially popped and dropped on the same candle, or within like 5-10 minutes. So it was fairly quick to get out. So I got in on this break right here. And then we see that the breaking candle low is right here. So I quickly got stopped out within the next candle. So that was the deal there. Again, not a huge loss, nothing insane, stack it up to be $76, on the trade. Not bad. So we're keeping the losses, under $100, which is good. It's really good, I think, on these trades, because then you have a trade like NVDA, which this one, again, is kind of a similar situation where we have this tight consolidation. NVIDIA, by the way, let's jump out to the daily chart. This is why I like it. It's the top stock on my list. Look to the top right. It's number one. It's up 3.5% now, or 3.25%. It's the strongest stock of the day. That's where I want to be looking for upside opportunities, especially earlier in the day, right, when they're not up a ton already, ideally. But I'm saying, hey, NVIDIA, we're breaking out here. Like we just had right now, which is kind of crazy to me to think about. And it's actually funny how NVIDIA has done this. I don't hold NVIDIA in a portfolio. I don't hold really any individual stocks in a portfolio anymore. Just the way that I like to do things, minimizes risk. Obviously, it limits your upside, because if you happen to be in an NVIDIA the past year, you're crushing it, right? But it comes with more volatility, more risks. But a lot of people looked at NVIDIA's daily chart and they said, holy crap, we have a massive head and shoulders here, get ready. And it looked like for a couple of days, this did not look good, right? But what has NVIDIA done, as it has the past year? it has faked you out and snapped it right back up. And just like that, within now like 2 weeks of looking absolutely horrible down here, breaking under $400, which it hasn't been in a while, hasn't been since June, since, really after the earnings report we had back in May. Didn't look good. And then boom, look at that. You just broke the right shoulder. That invalidates the inverse head and shoulder, or the head and shoulders, not the inverse, the head and shoulders right there. So the head and shoulders has already been invalidated, just like that. 2 weeks later, done. So it's kind of crazy. So when I see that, I'm like, here's an opportunity for you to squeeze this thing out further. So then I'm like, okay, I like the long side here. If I'm going to trade it, it would be only to the upside. Do we have a consolidation phase? Can we get a break of consolidation for a pop? And we did. So I'm watching NVIDIA. This one, I have to say, it did work, but it was maybe a little bit of an early entry. Now, the reason why I did so is because of volume. So essentially here, I'm seeing NVIDIA consolidate above VWAP. So I'm like, okay, we got consolidation above VWAP. That's good. Long side here on the breakout. Now, I want to play the break of this consolidation right here, okay? Or the break of these highs of the consolidation with the opportunity to go to a high of the day. And that's what I did. Now, the reason why I did that was I really did it on this candle right here. Okay, see the bottom volume? See how we got a little bit of a perk in volume? Not a ton, but it perked up, and it was higher than the past 2 candles. So these 2 candles, we had fairly low volume. The next one, we did break it. I got in on the break of this little upper wick on higher volume. And then my stop loss goes under breaking candle low. So the stop loss goes right there. Could have been a scenario where we have this is a scenario where it was a very tight stop, because like either it's going to go or it's not, and that's it. And in this case, it went. And there it went. And I had targets up towards 480, which ended up hitting, and now it's actually gone to 482. So that's pretty cool. But if you do the math on the risk reward in this trade, from, let's say I got the upper top wick here, right? With the stop under breaking candle low, I mean, for 480, that puts you right here. It's about a 2-to-1 risk reward. So kind of the same deal, right? We're looking for, I mean, not that I'm necessarily like it needs to be 2-to-1, but that's a good kind of second check of like, hey, the risk reward ratio is good. It's over a 1. It's ideally a 1.5 or better. That would be awesome. And we're good. And because we're playing shares, 1.5 or better risk reward ratio is great. In this scenario, I did not scale out. I probably could have, but I had nice gains, and so I took the gains, and I was happy to move on for the day. And then I played the Tesla trade on the backside. But other than that, that was it. So that was today. A lot of stuff going on here. But what I'm going to be doing now is I am going to be tagging these trades based on the time frame of the setup. So my next task for like later today or whatever, maybe tonight when I'm watching the game or something. The game's going to be awful tonight, by the way. We got the 2 worst teams in the NFL playing. So it's a good night to like just do stuff on your computer, I feel like, while watching the game. We'll be going back through my trades and now tagging them 5-minute, 30-minute, 1 hour, whatever, 15-minute, whatever the time frame of the trade was, of the setup that I played off of for that trade, that I will log. So what I want to do, because now I'm noticing this is kind of something I've been noticing, I want to do is I want to get a good understanding for, it's going to take time. Again, it's just an additional variable that I do want to start tracking here, which Trade Zealot does a great job. I'll leave a link to them down below. Like always, I love them for this purpose. If you're a nerd about the data and tracking, which you don't have to be an insane, crazy nerd when it comes to that stuff, but if you aren't tracking to some degree, whether it's just with a spreadsheet or something, you're probably not doing yourself the best service, right? Doing yourself a disservice. But this way I can look back and go, oh my, like over the next, 6 months, 3 months. It'll become apparent over the coming weeks, right? But getting more data is better. But over the next couple of months, weeks, months, oh man, I've taken 20 trades based off the 1 hour time frame, breakout or breakdown. And out of those 20, I'm 15 wins, 5 losses. And I took 40 on the 5-minute chart. And out of those 40, I'm 21 wins, 19 losses. And then I took 5 on the daily chart for swing trades. And out of those, I'm 16 wins, 4 losses. And then that, like, I don't know, I'm just giving you numbers, right? That tells me pretty clear, stop trading the 5-minute chart. It's just an additional optimization to my strategy. It's like, stop trading the 5-minute chart. If that's what the data tells me, focus on the 1 hour and up. There'll be less trades. Maybe we can size in heavier, but less trades, simpler, less time on screens, less time sitting behind a computer, like feeling the emotions and the opportunity to do something that could be negative towards your P&L, and then more opportunity to let things work and just let the trades be the trades. That's kind of my thought process of next, of like what I want to start to dial in next. And so you can kind of see, I think that this series, since August is when I've been really doing these videos, but these trade recaps and all this stuff has been really good to see inside of my head, like what, kind of I'm thinking about how to optimize. Of course, I'm not teaching a strategy, and I don't think I would ever do that, to be honest with you, follow this exact thing, because everyone's going to have their own quirks to a strategy, right? And there's a million that can work for you. The simplicity of simply following trend line breaks, could be all you do, right? With certain context that goes into it. But what I think it comes down to is thinking deeper into how to optimize it so you can spend less time on the screen. Now, maybe you don't want to do that. Maybe you love sitting at your computer all day, but maybe you spend less time on the screen, more time doing other things that could either make you money, make you happy, or healthy, is kind of my view. And then, so that trading is kind of like a positive piece to your life versus something that might take away, right, from other aspects of your life. Because again, if the game plan, it comes down to a lot of things. Like, you might be, I want to sit here and scalp on the 1-minute chart all day, or you could sit there and be like, you know what, I absolutely do not want to do that, but I do love trading. I like charts, and I want this to be a skill that I want to learn this skill, or I want to improve upon my skill that I might be already profitable at, but there's always ways to improve that skill. So that's kind of the deal. So that's today. We can see that we are green there. Not a lot of trading today there was actually a lot of trades. I'll be honest. There was a lot. Now it says 6, there really was 5, which is honestly more than I'd want to take, but I didn't hit my max losses and stuff. So again, keeping yourself in the game, keeping losses small. And I found that happens to be the case. Back when I was trading options, I would either run out of settled cash, A, or B, after taking 2, 3, or 4, 2, 3 trades, it's kind of like, it's easy to chop yourself up. But when you're trading shares and you find yourself in that like slower period of the day, right now it's 11 a.m. So, it's noon Eastern time. So it's like, it's not that bad. When I was trading, it was like an hour, 15 or half hour to an hour ago was when I finished the last trade. So it's like not that crazy, but you're able to kind of sit back and let the thing work because the chart's a chart versus having to be like, oh my gosh, I'm getting theta decayed. You know what I mean? With options. So it's I like it so far. It's been a good change. Oh yeah. And let me pop over the Surge Trader dashboard. I'll refresh it for you. So this is again inside. These trades are all inside of the prop firm accounts. We are currently sitting at a balance based off of realized trades of just over $50,900, but our current account is valued at over $51,000 because of current open positions, and that's the deal. So we're kind of, honestly, I feel like I've been just treading water the past like week or two, but it's fine. If the swings end up panning out, the open positions that I have end up panning out, which they seem fine. There's no reason to sell them or take profits yet. We can pop up nicely, and then in the meantime, just let this consolidation market kind of figure itself out, and we'll be there on the backside of it, up or down to play off the momentum ideally. So that's currently the update. I'll leave links to the Surge Trader platform if you want to check them out or try them down below. Highly would recommend waiting until Black Friday timeframe when a lot of these places are going to have deals. In general, for a lot of things, if you're looking to buy something, right, sign up for TradingView or upgrade your TradingView subscription, probably wait till Black Friday to do that because you're probably going to get better deals then anyway. So But yeah, I'll leave any links and resources like usual down below to all the stuff that I use. And thanks so much. Like button if these videos are helpful. That's great. If you're watching on YouTube, I appreciate you. If you're watching elsewhere, maybe I post it on Twitter, I also appreciate you. Consider following us, and we'll post these videos on YouTube every day. So thanks so much, and I'll see you guys in the next one. Peace.